on now? Here we go. Yeah. Yep. All right. Good afternoon, everybody. Happy Tuesday afternoon, June the 27th. Glad to see my Futures family and Team Top Step here. Hope you had a good trading day. It's going to be an interesting reflection today. A couple of things we were talking about this morning that really played out nicely. And we'll take a look at what happened in these other markets. As far as the equities are concerned, obviously, we've had a pretty good move to the upside. S&P's up about 48 points today, approximately 1%. NASDAQ up approximately 250 points today, 1.7%. And the Dow up 213 ticks today, 0.63%. Crude oil down today, 67.70 last. We've got that down 1.67 or 2.4%. So as far as the economic numbers that came out today, we've got, well, home building and sales, all of them pretty much higher than expected. Durable goods orders higher than expected. Consumer confidence higher than expected. So I think the markets kind of showed that there's very little fear of the Fed actually pulling something unusual at the July FOMC meeting. Or was today's rally purely technical? Only time will tell. We'll be watching to see if there's any indication in open interest and volume as we move forward to see how the reversal of the downside move today plays out. Today's leaders, as far as stocks are concerned, an unusual one, a company called Generac. They make individual generators for homes, seeing a big surge in demand as the heat wave in Texas and other areas increases the need for backup power. Today's loser, Walgreens. They've slashed guidance amid a significant drop in the need for COVID vaccines. Tomorrow's important events. We know we have Chairman Powell speaking at one point, and I'm probably going to be talking to the ECB. We've got international trade in goods tomorrow. We've got, of course, mortgage applications and retail inventories, wholesale inventories, Powell speaking, and the EIA petroleum status report to round out the session tomorrow. So take a deep breath. The day's over. The rally has ceased to kind of continue at least for today in the equities. Crude oil, of course, lower. Gold a little bit lower, still not a big move. The euro higher. I still can't figure out the disconnect between gold and the euro as far as the dollar is concerned, and the 10-year still remains relatively range bound. Good afternoon, everybody. Rooster, good to see you. Vince, good afternoon. ZK, Anthony, Anissa. And if you've been to Walgreens, you know why. All right. Make sure you hit the lucky like button, share, comment, question, feedback, heckling, love are always welcome. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. And we had a really good and interesting coach's playbook today. We're talking about, finding an educator or a mentor or somebody who's going to be able to help you improve as a trader, something I've enjoyed for the last 12, 13 years here at Top Step. And there's a lot of good stuff out there. Just try and absorb as much as you can. Take away the stuff that isn't working for you. Focus on the things that are, and we're looking forward to your success as a trader. Santi, hello from Paris. Good to see you. So let's jump in through the charts here. Let's start with crude oil. We'll just go left to right in clockwise fashion here. So still range bound. I mean, the last check of an upside move was here. We checked down to this move here. We're now checking back to the low. If we can't take out the low, range bound rules say we look for opportunities for long here that allows us to limit risk, and the termination of an opposite move would be to the upper end of balance. Here's what it looked like on the 30-minute chart. Overnight inventory was relatively short. The first thing we did this morning after the open was adjust overnight inventory. We were too short in short time frame. The market opened. We scared all the short time frame traders out, taking us almost back to settlement, and then the real movements seem to come in, and we've got the API coming out at 3:30 today and EIA tomorrow for some more information as far as that's concerned. Here's our TPO chart, normal variation day, with a potential. Yes, it is a late spike to the downside. It could be an interesting opportunity. Borrowing crude oil, similar to what we had in the S&Ps today. Here's what we were looking at. So I'm just looking at my notes from this morning, and there were a whole bunch of hints that we could see a significant upside move in the S&Ps today. Here is the daily chart. We've been pulling off the highs for almost 2 weeks now, it seems, better part of a week and a half. And we've been talking about the idea that the open interest has not been coming in. We've been cutting off interest in this market all the way down. This morning, we called this the grade of this auction a D. Well, the only thing that could be worse than a D in a downside auction is an upside auction. So now the downside auction gets a flat out F, and we've got a new opportunity to the upside. Volume, however, was not all that impressive. What did it look like on the New York Stock Exchange? A little bit higher than yesterday. So the New York Stock Exchange is telling us that the volume was a little bit better as far as the individual shares are concerned, and that to me is encouraging for continuation to the upside. We'll be looking for opportunities to see what the open interest does today. If we lose open interest, that may take some of the lead out of the pencil, if you will, in this upside move. Here's the 30-minute chart. Okay, we were talking about this being a bull flag. Well, we broke out here, but we didn't really continue. And then we put two more points of contact on this trend line. We talked about this morning, number one, the fact that we have been cutting off interest on this move down, not bringing in new business, getting out of old business. We talked about if we're going to see continuation to the downside, we're going to need to see some meaningful participation below the weekly kickoff low, which matches the weekly low from the week before last, because we're still inside of that range. So the market's still continuing to kind of exhibit some sort of balancing activity here, but today we certainly did not see balancing activity. So poorly performing downside move in the form of a bull flag. Finally, we get our bull flag breakout. Well, what else did we see? We saw a late spike yesterday. The late spike, we opened above it. That's a higher probability of price being accepted at higher pricing. So now we've got not only a whole bunch of traders looking for this market to continue lower, they've buried themselves into short positions all the way down. Now we're seeing our breakout to the upside, which is a pretty decent move. It's rather emotional. There's some weaker structure in here, so it would make sense to pull back and kind of recover some of this. But now, one last thing. I'm not sure if this is right. Hang on, let me F-bomb this, if you pardon the colloquialism there. So, all right, it's looking like we ended up with pretty much even delta here, but look at what's been going on day over day. Negative delta all day, even delta, negative delta, negative delta. The short time frame traders have been the ones that have been pushing price lower. And we can kind of see that in the fact that the open interest wasn't increasing, it was actually decreasing. So it looks almost like we have longer time frame buyers against shorter time frame sellers that finally gave up today and pushed price considerably higher. We talked about this morning the idea that this was the trend line This was the kind of breaking point where we were going to see a potential change in short time frame market state. And that's what I'm calling this today, was a short time frame change in market state. We even talked about the idea that this point of control would be a nice, comfortable level for the market to try and get to. And if it takes that out, the next level is all the way up here. Of course, we didn't get all the way up to this naked point of control, but we walked right through this one. We one time framed higher for the better part of the day. What's one time framing higher? Each 30-minute bar had a higher low and a higher high. This indicates all time frames working in concert on price. So we see an increase in open interest tomorrow. That will be very interesting to me. I was talking, I think, in Make Hogue Money or one of my coaching sessions today that, this lack of open interest, the play with this trend line had me looking for opportunities for longs all day long. We had a couple of losses trying to stay long and Make Hogue Money. I recovered that for us. So we're okay. Now take a look at the NASDAQ. It's a different story, but similar asset, right? So we closed below weekly kickoff low yesterday. We were actually seeing some open interest continuing to push into this market, which would make it a little bit more probable to continue to the downside. I think it was the broader market today that really brought us back into profitability, well, at least above weekly kickoff low here in the NASDAQ. And I'm pretty sure nah, I was looking at one of the tech stocks, but I don't see that as being one of the leaders here this morning or this afternoon. So here's the 30-minute chart. Now this was different. I moved the trend line in the S&Ps because this was the point I thought the market was going to break out. I left this trend line in the NASDAQ because I felt as though that had a little bit more possibility of providing an opportunity for us. And it was today when we opened above it, couldn't accept down below it. We were in range, we were in value. There wasn't a whole lot to think about going into this market this morning, but it could not continue lower. We actually ended up with a little bit of negative delta early in the morning here, indicating the potential of longer time frame buyers, and then the market took off. It did close above this upper trend line. So again, if we do bring open interest into this market overnight during today's session, that's going to give it a little bit more of a push to the upside. If you ask me, I was looking for opportunities for longs all day long today. I did get the opportunity to participate, and I hope that you all did as well, because the nuances, the ruling reasons were really all there, especially in the S&Ps, for a relatively substantial upside move, and that's exactly what we got, right? Uh, I'm the only one that can make Hogue money. I can lose money too. Don't kid yourself, Rooster. Gold. So we were kind of living by our range bound rules here on the 30-minute chart. I was looking at this morning going, I don't even want to touch this because we're in the middle of the area of balance that we're in. Here's the upper area, upper balance, upper lower edge of balance. I was looking for opportunities at either of those areas. We got there, but not until after the close. So there was really not much for me to do here. Did not see this coming, didn't see a reason for it to come. And again, because we're range bound, I'm very cautious only to be focusing on extremes, whether they're daytime frame extremes or longer time frames extremes. Now, that said, our initial balance was relatively small up here. It did end up bringing a double distribution trend day once we finally did take out this low. This was the C period low. D period, we finally took that out and found some direction to the downside, but low excess high, kind of a low excess low. If we open between this distribution and this distribution, tomorrow might be a good day to look for some rotational activity in repair of today's double distribution trend day. And all of this is hypothesis. Hypothesis. Here's the euro. Value upper extreme of balance, lower extreme of balance, opening right in the middle of it. Didn't necessarily see good opportunity in this market. We did open with a gap. We were unable to close the gap. We did try and continue to push higher, but we maybe saw some inventory adjustment back from the shorter time frame, and then it just died here. It just flatlined. It was like somebody get the defibrillator for this thing. My goodness. Here's the 10-year. Balance. It's all I can say. In the medium time frame, this thing is so in balance. It's like if I put if I took this to the grocery store and scanned it, I'd get a can of peas. It's just up one day, down the next. Here's the 30. All right. Well, we kind of had a look to the upside, almost to the upper extreme, almost to the lower extreme. Eh, If I were playing horseshoes, I would have had a horrible game today because I was close, but not close enough. Here's the TPO chart. Double distribution trend day to nowhere. Jeez. Went right to this point of control down here. That I find kind of welcoming and interesting. But we'll watch the open interest tomorrow and see if there's any major changes. And now for the natural gas. Okay, we had a late spike on Friday. We did maintain price above that late spike. Where did we trade down to today? Base of the late spike. Well, secondary base of the late spike. Here's the first one. But when this market really started to kind of accelerate out of its previous range, I'm looking at that level right there. We even talked about that this morning. A move down to this level, or even better, this level, might be an interesting opportunity. So we're still holding higher pricing based on this late spike. Opening below that, meaningful participation below that changes everything. Take a look at the TPO chart. Another late spike to the downside. What the heck is this market trying to do to me? I'm so glad that I don't trade this market. It seems to be a beast, and I like to think that no matter what the market, no matter what the asset class, no matter what the time frame, the one thing that all these markets have in common is that they are never-ending auction processes that occur in infinite time frames. It's a mouthful, but that's the way I look at markets, and that's how sometimes it becomes clear when a market is too far one way or too far the other way. And a lot of that is in that volume and open interest and those delta studies. And I again this morning, all the pieces were in place for a move upside in the equities, and it never has to happen. It never has to happen, but at least it gave us opportunity, at least in the S&Ps, at that trend line to be able to use that to limit risk. It took me 4 tries to finally get into an opportunity in that up move in the S&Ps based off that trend line before I actually had something that I was confident in, and that it never came back. I was short. I was long above it, short below it, long above it, short below it, finally long above it, and it finally took off. And again, I was able to participate in a pretty decent part of that. Now, I struggle like everybody with all those nuances and everything pointing the way that they were. I still doubted the fact that it could reach that 4410 naked point of control from I think it was last Thursday. Still doubted it, but it got there and then some. So we'll see what it looks like tomorrow. So again, we are looking at mortgage applications, international trade, retail inventories, wholesale inventories. Chairman Powell all speaking, and the EIA Petroleum Status Report, State Street Investor Confidence Index, kind of a minor one there. But we have a lot more economic data due out this week, so we will Look for you tomorrow morning, 7:45 on the market prep. Oh, I forgot to mention Thursday, 10 o'clock. Jared Tendler will be back on YouTube to discuss trading psychology and performance. And speaking of performance, I just found out, I read this, that he has qualified. He's a big golfer, you know. He's qualified for the Philly Open. So he's doing what he says he's going to do. He's getting better a little bit at a time. I'm looking forward to asking him how he did that. Was it just by sucking a little bit less, as he likes to say? So, anyways, we'll see you tomorrow morning at 7:45. Thanks for joining me this afternoon, and we'll see you tomorrow. Get some rest. Be ready. You never know what's going to happen tomorrow.